Welcome everyone from the Wall Street Silver community. We have our special friend with us, CEO and President of AbraSilver, John Miniotis. John, how are you doing today, sir?
Doing very well. Thank you. Thanks for having me back.
Awesome, awesome. Well, we're super excited to have you on here. We also have Jim Lewis from the Wall Street Silver community as well. Jim, you want to get right into it?
Yeah, thanks for coming back, John. I'll talk about the market in general, about silver, because you're an expert in this field.
Yeah, no, definitely happy to walk you through sort of, things from my vantage point. I mean, for me, I think as I look at the macro view for silver, you take a step back. I mean, I'd say conditions right now are pretty much perfect for silver. I mean, the setup here is almost an ideal situation. So just from a financial system point of view, I mean, clearly we all know there's too much debt in the system currently. The Fed and other central banks are completely trapped here, essentially. I think there's really no other choice for them at this stage and just keep interest rates suppressed near all-time lows, keep printing fiat currencies in order to keep the system afloat. And so, some people, they call this stimulus, but the central banks, in my mind, I mean, they aren't really stimulating growth in any way as far as I can see. I mean, the injecting all this money is essentially now what's needed just to keep the system from completely falling apart. And so, yeah, basically, I mean, this is unfortunately the macro backdrop we all have to live with. I think there's signs of inflation everywhere. And so, I think that's why investors more and more are investing in real tangible assets. And so, that's whether that's real estate, it's farmland, it's copper, it's oil. I mean, obviously silver and gold play a big role in that as well. But, I think overall, just the overarching macro themes for any of those commodities is essentially the same. I mean, if the central bank can just create $2 trillion out of thin air overnight with a couple keystrokes, then clearly, in my opinion, I mean, that dilutes the value of the currency. And so you want to be positioned in assets that can't be printed. Otherwise, you're sitting on cash and your purchasing power is just getting destroyed year after year. And so,
well, that raises you said something really interesting. You said the central banks are trapped, a sort of a debt trap, so to speak. I've heard that term a lot out there in the media or in the Twitter sphere. And that's let's try to dig into that. They can't. There's so much debt that they can't really raise interest rates, and at the same time, they have to keep buying all these assets and keep printing money. They can't really pull the plug.
I think they've just passed the point of no return. I mean, for them to regulate, I mean, historical interest rates, let's say on average, are 5-6%, whatever they were historically. For them to go up to 5% now is completely out of the question. I mean, the system falls apart if interest rates are hiked 25 basis points, right? Nobody's talking about ever going back to 5 or 6%. I mean, there's so much debt out there. Governments would collapse. I mean, the financial system would essentially crumble at those types of interest rates. And so you need to keep interest rates suppressed. I mean, we're seeing negative real yields globally in Europe and Japan and other places. And for them, I mean, even going back to zero interest rate could spell trouble, right? So you're now in this trap where it's essentially keep interest rates as low as possible. Governments can never, unfortunately, really balance their budgets, again, in my view, right? Now your fiscal spending's coming in as well, not just on the monetary side. So now governments need to be spending trillions of dollars, pumping money into the system as well, in addition to having low interest rates. And that's a function of all this debt that's around us. And that's why you want to be invested in gold or silver or something tangible that can't be printed out of thin air. I mean, otherwise you're just losing your purchasing power holding dollars in a savings account paying you 0.001% interest rate per year. I mean, that doesn't do anyone any good, right? It's a huge incentive to go out and buy real assets. And that's really the backdrop of why people are stacking silver. Obviously, you guys know that. And so, you hold on to a piece of silver that's been around for 5,000 years and it's maintained its purchasing power, and you pass that down onto your children, or you hold that for 10 years and, your wealth should increase at a greater rate than the inflation rate. And that's what people are trying to do.
When you said 5% interest rates, could you imagine we have 30 trillion? I mean, I know you're Canadian, and the numbers are probably proportional for the Canadian government, but we have 30 trillion in debt now in the United States, with only about a 21 trillion sized economy. So debt to GDP is 150% in this country now.
Yeah.
Now, if I recall, Greece had their debt crisis back in, what was it, 2011? You remember? I just looked this up the other day. You know what their debt to GDP was when they had their debt crisis?
It's probably similar.
About 130%.
Yeah,
we're beyond Greek levels of debt right now. It's insane what we're doing. But, world reserve currency, whatever. I guess we can cheat a little for a few years. But something that Keith Neumeyer brought up, there's a lot of potential mines out there where silver is just a byproduct, where like zinc is what are the base metals that are common where you find silver?
Yeah, zinc and lead. Zinc and lead are most common. I mean, sometimes copper. But yeah, zinc, lead are polymetallic mines that normally contain a byproduct of silver for sure.
Yeah, so I was asking Keith, what's your process now? What do you do now to keep First Majestic growing with more mines? And he says, well, I could go buy a zinc mine and get some byproduct silver from that, but I don't want to become a zinc miner. And he says, that's not my goal. My goal is to make First Majestic keep being a primary silver mining production company. And what he brought up at that time was it's really hard to find a primary silver mine these days. Those projects are extremely rare. And what I find interesting about Abra is that's exactly what you guys are doing with your projects. You have several high-grade, potentially large silver mining projects that are in development. What's going on? What's the latest in, I always mispronounce this, Diablos or
Diablos, correct. Yeah. No, you're right. I mean, it's well known. It's been the case for several years now. It's nothing new. But there's for sure, a high scarcity of high quality, especially. I mean, it's hard enough finding sort of primary silver projects. There's probably quite a few, but finding one that's in the lowest quartile, high margin, within a junior company, especially like we are, that's quite rare, I'd say. And so, there's lots of silver projects out there, as we mentioned, but, we're 100% precious metal focused, so silver and gold. So right now at current spot prices, the economics are about 60% silver, 40% gold. So very good breakdown between those two commodities. But importantly, the project we have, Diablos, these are high margin ounces. The cash costs here to produce, based from the old PA study, which we've proven, is quite out of date. We're intersecting significantly higher grades on a very consistent basis. We'll talk about the drill results. But even in the 2018 study that was put out, cash costs from this project are projected to be in the lowest cash quartile. So to produce an ounce of silver equivalent, cash costs are about $7.50 per ounce here. So these are very high margin ounces. The fact that it's open pittable means that you can scale up production pretty quickly. So you can be producing over 10 million ounces a year of silver equivalent. So it's quite rare. We've seen a lot of silver companies, even First Majestic themselves, they just bought a gold mine. We've seen SSR, it was formerly Silver Standard. They changed their name, became SSR. They're now more of a gold company for sure. Than silver. We've seen Fortuna Silver, which is now looking to acquire Rox Gold. They're becoming a gold, assuming it's not because they don't like silver. It's hard to find growth, right? Like, where are you going to grow? If you're just limiting yourself to silver projects, it's hard. It's a lot more typical that there's multiple gold exploration projects or gold mines out there, easier to grow. And so that's where we sit in with a highly scarce project that's, high margin ounces. We're clearly growing this, and we know what we have, and we're advancing it as quickly as possible towards production and towards a production decision, because we see this as a very attractive asset in a safe jurisdiction, and an asset that's going to be highly touted, I think, by a lot of our peers and bigger players out there.
Well, hey, let me show you a graph I have. Can you guys see this?
Yep.
So this is showing the average number of ounces per ton. I know you're from Canada, so you probably think grams per ton. I often do also, but this basically shows the ore grade decline for the past 15 years. It's from SRS Rocco. And does this you've been in this industry, sort of match with your own expectations or your own experience?
Yeah, absolutely. And I think that's the case for silver. It's likely the case for gold. It's likely the case for copper. copper especially. I mean, certainly most of the high grade projects have been mined out. And so, yeah, it's harder and harder to find. I mean, it's a finite resource. There's only so much silver in the Earth's crust. A lot of it, if it's near surface, high grade, I mean, that's been mined out. What we have, though, is near surface, high grade. So there's obviously some exceptions. I mean, over time, grades diminish, gets more expensive to find high quality projects. Permitting timelines are also getting longer everywhere. So it's harder and harder. It's more challenging to build new projects, find high margin ounces. And so that's why over time you need higher commodity prices to offset that. If copper ever goes back to 50 cents or silver goes back to $8, I mean, there's no profitable project in the world. And so, yeah, to incentivize production, you'll need $30 plus silver to make projects economic. But yeah, essentially, again, going back to us, I mean, we're pretty unique, I'd say, to have a high quality project with low cash costs in the lowest quartile. There might be less than a handful of those that I know of in the hands of a junior out there. And so it's very unique, I think, what we have, and that's why we're advancing it as quickly as we can.
Nice. Well, you know, most of these silver mines are underground mines. What you guys are doing is it's open pittable. Correct. So it's very shallow, and your resource is primarily at 200 meters in depth, meaning you don't have to drop those deep shafts, meaning the grades, I mean, so much more material available for actually producing silver as opposed to a deep underground mine, correct?
It's hard to understate that point. I mean, that's a very important point to make. The intercepts that we've been coming out with, I mean, are typically, I mean, even today's intercept, for instance, it starts at about 200 meters, goes down to about 280 or so. So this is a shallow resource, open pittable within oxides. That's important as well, because much cheaper processing. It's more cyanide leachable essentially. And so, you know, having an open pittable primary silver project is, again, quite unique. The cash cost to mine a ton of rock, open pittable, I mean, it's maybe $3 per ton is what was assumed in our PA. If we were to go down and, you know, there's various, obviously, underground mining methods. But on average, I'd say to mine a ton of rock underground could cost you $30 to $80 per ton. We're talking about $3 per ton. I mean, we have to move some waste as well. So there's a stripping ratio that's involved. But overall, I mean, it's an order of magnitude cheaper to mine open pittable projects. And the big factor is the scalability. I mean, it's hard to get 10 million ounces a year of silver from an underground mine. Like, you have to have super high grades. For us, I mean, it's open pittable. We can mine 6,000 tons per day, get to 10 million ounces a year on a silver equivalent basis. And that's, you know, a fair size project. It's not huge. So you can get much higher scales. That also helps drive down your costs. So lots of benefits of having, of course, an ore body close to surface is the ideal situation. That's what everyone wants. And fortunately, that's what we have here.
Well, and nice. The depth, the widths are pretty thick for what you're doing here, right? This particular set of drilling results, I see 75 meters, but I recall from other drilling results, some of your other holes, you've come up with over 100 meters of thickness for the intervals, correct?
Yeah, no, that's what really stands out here. It's not only the high grades. I mean, the grades we're hitting are, you know, in the hole we announced today, I think it was over double our current resource grade. And so those grades are good. Typically, again, in underground projects, you might get a couple meters of high grade hits. And that's, you know, that's pretty important. But to add significant ounces, I mean, it's just, you know, you have to take a volume. So you take your grades times your widths, times the length, times the depth. And so, yeah, when you have widths of 70 meters, 103 meters was our big intercept that we announced last month now. But yeah, consistently coming out with over 50 meters is very unique. That's how you add a lot of ounces, especially at, you know, significantly higher grades than the current resource. And so that's what we feel we're doing. I mean, we're very fortunate. We're consistently coming out with these excellent widths, with very good grades, close to surface, in oxide mineralization. So it's not much more we could ask for.
My other question is, there's a major silver mining production company that's actually active in that area.
Fortuna Silver has completed construction of their Lundero project, but that's actually a gold project. So it's a gold heap leach. Again, that's open pittable, close to surface, within oxides, but 100% gold. But yeah, no, Fortuna Silver is, was a silver company. I mean, if they go ahead with the merger with Rox Gold, again, one of these companies transforming into more of a gold producer going forward. We just completed only our phase 1 drill program. We're now into phase 2, looking to step this out towards the northeast, again, looking to potentially expand the pit significantly, like 500 meters away. And so, we have a lot of value to be unlocked. We're coming out with economic studies on our own, and we'll look to get this fully permitted. So we feel by early 2023 is when we'd be ready to make a construction decision on this project. And at that stage, you evaluate your options. Does it make sense for somebody to acquire you, depending where your share price is at? Or do we bolt on an operating team on our own with significant experience and look to finance this and build this ourselves? I mean, we'll see. Obviously, nobody knows what the future holds, but there's lots of options available for us.
So, John, you just said you completed phase 1 and you guys are moving on to phase 2. How long do you think until phase 2 is coming up?
Yeah, so phase 2 of the drill program. So phase 1 was essentially, we were drilling within what's known as the Oculto zone. So it's more or less within the existing resource. So we've been drilling some deeper holes, sort of expanding the mineralization down at depth. We also drilled out a shallow gold zone, which could really impact economics favorably. If, now what was previously considered as waste under the old study becomes high-grade gold, and that's almost like a starter pit within your overall project. So the payback there could be, very, very quick. And so we've completed, and then of course, sort of the intersection between the main breccia and the cross breccia, which is sort of the juicy stuff we've been announcing as of late. But yeah, most of that falls within the Oculto zone. So some of that's new mineralization, like the surface stuff was previously waste. We'll now have some tonnage around that. And that was 15,000 meters. And so we've completed that now. We're still waiting to get back 10 results from the lab. So the last 10 holes will be coming out here, as soon as we get them over the next several weeks. But now the drilling, so we have 2 rigs at site, we moved those towards step out targets. And so we moved those outside of the known resource. So right now they're both drilling in the northeast zone. So we have historical mineralization there up to like half a kilometer outside of, the proposed pit shell. And so we're systematically stepping out along that half a kilometer plus horizon, trying to expand this project. And so we've announced, the board's approved a minimum of 10,000 meters for this phase 2 program. Wow. Again, that's the minimum. We could easily expand. Phase 1 started off as a 3,000 meter, and we ended up doing 15. It depends. If the results are great, we can, of course, continue to expand that. But a minimum of 10,000 meters, for sure, we'll be drilling. That'll take us probably until July, August, I'd say, this summer. And then we'll look to, again, come out with either an expanded phase 2 or look to phase 3. There's a number of targets on this property. So I expect we'll be drilling all year here. So we expect to have good news flow coming out on a regular basis for the remainder of the year. And in parallel, coming out with the updated resource on the Oculto zone by the end of July, and then an updated economic study by September. So it's a busy year ahead. We've got lots going on.
We're excited.
Well, so the last time you guys did a resource update, that was from like 2 years ago. And if I recall, it was like around 140 million ounces of silver. Wow. Now the updated resource, and that's what everyone who I talk to online is waiting for, is this updated resource based on all the drilling results you've been knocking out in 2020 and early 2021. So, but that's only going to be based on the phase, correct me if I'm wrong, the phase 1 drilling program is what's going to be in the resource update, correct?
Yes, that's right. So all these holes that we've announced to date, plus these last 10 holes that we're waiting to receive, all of these will be included in the updated resource. Plus, historically, there's been over 90,000 meters drilled here. There's been over $40 million spent. So we're going to reinterpret all the historical information as well. It seems pretty obvious that this resource was vastly understated, in my opinion. It remains to be proven here. We need to come out with the updated resource. But every time we're drilling a hole, the mineralization is coming back double, triple, quadruple sort of the grades that we're expecting under the old resource statement. So clearly, we're going to reinterpret the old resource plus add, all the 15,000 meters of drilling that we've completed and come out with a new resource kind of by the end of July. So
whatever that number is, whether, I've heard estimates, I know you can't give an estimate, but I've heard a lot of people are thinking you might upgrade by 30% over the 140 million. Even then, you're not done, right? So when do if you get good results from the phase 2 drilling, that's not going to be included in this resource update, at what point does the phase 2 data get added into this? Is that another resource update in 2022?
So essentially, the resource update leads into an economic study. So we'll have an updated economic study this year based on all the phase 1 drilling. Now, in the meantime, as we mentioned, we're already drilling phase 2. And so all the phase 2 drill results will be in before the end of this year for sure. And so right now we're looking essentially to grow the resource, quite materially out towards the northeast. So that could be a significant pit expansion if we define a resource out that way. And we're looking at other targets. So up to 4 kilometers to the north, there could be other mineralization here. And so you can have a few different pits. This can almost turn into a mining camp down the road. And so all these results from phase 2 and phase 3, those will be updated into a feasibility study ultimately. So we'd, after this economic assessment is completed in September, we'll go straight into a feasibility study. And there you need to define a reserve, you need to do some engineering work. So it's a lot more detailed. But then on the back of that, we'll have, or to be included in that, we'll have an upgraded resource again. So yeah, no, by no means, this next resource we're coming out with is definitely not the final resource. It's just the next phase. We're showing, we've been drilling here for 15 months. We've had significant success. We're upgrading the resource, but it continues to grow. And that's why people, investors generally invest in junior companies, right? You want to show that your resource continues to grow, you become more attractive, you get closer to a production decision. And so that's what we're doing.
Well, I think that's why your stock price has just been going up so dramatically over the past, I'm looking back here all the way to the early 2020, and just your drilling results. Hats off to you. You've really just nailed it. I'm sure the investors have been thrilled. Look at this performance. And actually, you're poking around right here at a new all-time high.
I should have talked about AbraSilver a year ago. Look at this; it's incredible.
Well, I don't think Wall Street Silver existed a year ago, Ivan. So yeah. Ivan's been buying his first junior and exploration mining stocks lately in the past couple of months. So
good. Pretty new to it though.
He stepped out. He used to only be a physical stacker, but he's realized if the silver prices go up, if they go up 30%, let's say silver breaks through 30, and what's silver at right today? If the silver prices go up 30%, the miners, and especially the junior miners that are so much more leveraged, they could easily all double or triple from these levels just by getting silver over $30 an ounce. So that's why I do it anyways, is I see the potential here.
Do you see, John, more interest from the everyday retail investor in the mining space or the precious metal industry?
Oh, it's a night and day transformation from our end versus where we were a year ago. The story's evolved for us as well. So, clearly with all these high grade hits, there's more and more interest. A lot more marketing, extremely busy marketing these days for sure. Whereas before, a year ago, it was tough. Even, we were trading at 5-10 cents. The value proposition was clearly there, but when you're trading and you're so undervalued, it's harder, in fact, to get a meeting. It's just crazy, right? And essentially, now that we've come quite a long ways, people still think, oh, now I've missed the boat. It went from 5 cents to 60 cents. That's what I've been hearing all along. A year ago when we were at 10 cents, we were getting meetings and, oh, well, you've gone from 5 cents to 10 cents. The way to value a company is you look at the value of the share price and compare that to the value of the project. The value of our project near current commodity prices is $720 million based on the old resource. So ignoring the 15 months worth of work, ignoring all these high grade drill holes that we've announced here, ignoring all that, obviously just looking at the 2018 PA study, updating that for current commodity prices, the value is about $1.70 per share, I believe. based on, so we have a slide in our corporate presentation that shows you the value of the PA study at various commodity prices. Yeah, current commodity prices, it's about $1.70 per share. And yeah, we're still trading at 70 cents. So the value, I mean, you're not paying a premium to the value we have, even though that value is quite understated, in my opinion. I mean, we've obviously proven there's a lot more upside. We'll be coming out with all those results in a new update in July, as mentioned. The value of the share price is playing catch up, but it's nowhere near.
If there was if the resource is updated this year, and you have, I'm just going to pick a number, 30% higher from the old resource update, we could be looking at $1 billion project, and your current market cap is 267. So, and that's just what you have, like 4 other projects, right? We're just talking right now about one project in your portfolio, right?
This is the main one. The others are much earlier stage, but we have 2 other projects where we expect to have drilling this year as well. But those are copper, gold focus. I mean, those could justify sort of if there's a discovery made. I mean, those are both pre-discoveries. One's a project where we brought in Rio Tinto as a partner. They'll be drilling in Chile whenever they can. And then we have another large-scale project, again, in a friendly jurisdiction in Argentina, the San Juan province. And we expect to be drilling there by October. And so if there's a discovery made there, with current copper prices being where they're at, we can essentially spin that off into a new company. I mean, we'll obviously see what the future holds for those projects. But yeah, no, there's other value within the company that's not even being reflected.
So the Rio Tinto project is in Chile, correct? That's the copper project?
Correct, yeah. Copper
and
gold.
That's, okay. And I recall from talking to you before that we might have drill results by the summer on that one, correct?
Yeah, no, unfortunately, that's been delayed due to COVID. So Rio Tinto will be drilling that. So they haven't yet commenced drilling. So they were supposed to last year because of COVID. It continues to be ongoing delays there. So we expect them to drill. I mean, we're having a meeting with them shortly to discuss the latest plan. But the expectation is they'll be drilling there over the coming weeks and months. And then again, we have another project in a different province called La Coipita, and we expect to drill that ourselves starting in October.
Sounds good. Well, hey, John, thanks for the quick update. Thanks for sharing your thoughts on what's going on in the silver market overall. We love talking with experts like you who are on the ground.
My pleasure. Thanks for having me, and congrats on all your success. I mean, I'm seeing you guys continue to grow your viewership, and that's amazing to see. So.
Awesome.
We appreciate it, man.
Thank you so much, John.
Take care.